Market ends in the red after it fails to hold on to early gains. The Nifty back below the 24,600 mark. Financials, they underperform as banking heavyweights close in the red. Sensex falls close to 200 points and the Nifty down about 50 points. Broader markets remain in favor of advances.
Stocks of sugar mills surge after the government says that it will not impose any restrictions on production of ethanol in the coming season. Industry experts see this increasing diversion of sugarcane to near 5 million tons from just over 3 million tons.
Reliance Industries gained after Morgan Stanley's positive note says AI will redefine the company's equity story further, initiates overweight rating. Phoenix Mills as well surges on the back of bullish brokerage commentary coming in from Motilal Oswal. Good evening. You're watching us here on Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day while reliving today's trading session as well. I'm Mangala Malu, with me Hormaz Fatakia. Very interesting day of trade today, Hormaz, right? We were doing extremely well for most part of the day. At some point, the Nifty went ahead and crossed the 24,750 mark as well. And lo and behold, just as we moved towards the weekly options expiry, we saw one sharp fall down for the Nifty, and that was led lower by the Nifty Bank, an index that has not been powering the Nifty ahead. In fact, yesterday's up move was led by the IT index. Today's top contributor was Reliance. So the Nifty Bank not doing too well, always had everyone jittery, and right now as we speak ended about 0.2% lower, led by heavyweight banks. But Hormaz, you have a lot of the buzzing stocks as well. We'll tell you all those, but here's what we've lined up on the show today. We start with the top movers and shakers that Hormaz will tell us. Sugar stocks as well. They surged as the center lifted curbs on ethanol production, while Reliance Industries too gained on the back of Morgan Stanley upgrade. Phoenix Mills too rallied on a ratings boost coming in from Motilal Oswal Financial Services. But last but not least, we'll also tell you about the key events to watch out for in tomorrow's session. Let's talk about the movers and shakers then. Hormaz.
You mentioned about sugar names, and of course they are the ones that had a sweet day today, and sweet on very strong volumes as well. You take a look at most of those names, though did come off slightly from the highs of the day in line with the market sentiment. But take a look at the gains here. Double-digit gains for Sri Renuka, Dwarikesh, Dhampur, Awadh and Balrampur also having a very good session today. So it'll be interesting to see what kind of delivery data emerges for these stocks later in the day. A pocket that did well today was the PSU stocks, be it the defense names, be it the railway stocks. All of them saw very healthy gains, anywhere between 5 to 7% today. RVNL, NMDC, of course, on the back of that strong production update that it gave out. IRCON, BEML also seeing good gains in today's session. What also did well were the tire stocks, and almost every tire stock that we speak about did very well. Take a look at MRF, 6.25% higher on the stock on volumes that were the highest since August of last year. So on very strong volumes as well on MRF, and most of the others too seeing gains of anywhere between 4 to 7%. The newsmakers of the day, well, Sammaan Capital continues to move higher in its entry as an FNO stock, but MobiKwik was the highlight of the day, 20% higher on the stock after ADIA's exit, and with this the stock is also back above its IPO price of 278 rupees. D Development, of course, after an order win, and Axis Gates too building on the gains, and Sun TV after a positive brokerage note coming in from Avendus Sparks. But some of the high-flying stocks of yesterday's trade saw some profit booking today. Lumax Autotech was down 10, Ixigo was down 6, Godfrey Phillips and VST Tillers also seeing some profit booking, but not on volumes as strong as were those seen by the gainers in today's trading session, Mangalam.
Those were a bunch of movers, more advances than declines, but it was the sugar stocks that Hormaz started with the surge in trade today. So let's take that story further. The government says it will not impose any restrictions on production of ethanol in the coming season, giving a boost to the prospects of sugar companies, because ethanol obviously is better margins for them, higher realizations as well. And with increased ethanol production, chances are that the prices of sugar itself increases. Ria joins in to tell us how the sugar industry benefits.
Well, yes, Mangalam, this was a very significant boost for the sugar industry. India has removed all curbs on ethanol production from sugarcane juice and syrup, as well as from B-heavy and C-heavy molasses. This is by sugar mills and distilleries for the sugar season 2025 to 26. Now, the government is going to periodically review the diversion of sugar for ethanol production to maintain the availability of sugar for domestic consumption. And remember, these restrictions were earlier imposed in December of 2023 because of the rise pricing sugar prices at that point in time. And with this new moves, sugar mills will now be able to use the lying inventory of B-heavy molasses, and this is also going to help achieve the target of 20% ethanol blending. In a separate government notification, the government had also said that distilleries are now allowed to purchase up to 2.3 million metric tons of rice from FCI for ethanol production, and this is also going to enhance production from dual feed distilleries. Resultantly, all of these stocks are much higher in today's session, as Hormaz was highlighting earlier. Just coming to the valuations for some of these stocks, for Balram Chini, Triveni Engineering and EID Parry, they are currently trading above their 3-year averages, while Dalmia Bharat is slightly below its 3-year average PE. In terms of the stock moves over the last 1 year, most of these stocks are down anywhere between 3 to 45%. Only DCM Shriram is up around 9%, and EID Parry has been the outperformer, up around 37% over the last 1 year.
Ria, thank you for that update. Let's take this conversation forward with our guests on the show. Jai Bala of Cash the Chaos and Sudip Bandyopadhyay, Group Chairman at Inditrade Capital, are joining in. Gentlemen, thank you for sparing time and joining us on the show today. Sudip, you know, sugar stocks were the flavor at least a few years earlier when this entire ethanol story started to play up. But now they are lost in the reckoning. And with this move that the government has announced, do they get back into the reckoning? Do you see a major fundamental change, or do you just see this as a tactical play till the story plays out?
Well, I think, honestly, I believe this is a tactical play till the story plays out, and you're absolutely right. I think, ethanol blending and up to 20% ethanol blending was as a policy which the government has announced, but there were roadblocks, and government obviously monitors the sugar prices on the market, and they can't let this happen if the prices are going up. And now, because we are comfortable with the prices in the market and there is a sufficient production, government has allowed this. But I think whatever had to happen has already happened, and today's up move was a consequence of this particular order which came. I don't see too much excitement, further on this account. Fundamentally, I think sugar stocks have a potential to do well. Also, their performance will depend on how much export is allowed on a yearly basis, and that keeps varying again. So there are multiple factors which do affect sugar stocks, and one has to remember that if you are buying in sugar stock, be prepared for the volatility.
All right, we take that point, Sudip. So that's the view coming in on the sugar stocks. But let's get in Reliance as well. Reliance was buzzing in trade today, an outperformer after Morgan Stanley upgraded the rating on the stock. The firm projected an optimistic outlook, raising the stock's valuation to overweight, rather rating to overweight, with the target price closer to 1,700 rupees. Sonal joins in with the details on that one. Sonal.
Well, Reliance Industries has been in focus since the time AGM took place, and now there's an interesting note coming in from Morgan Stanley. They say anti-involution and AI will redefine Reliance Industries' equity story. They are the largest beneficiary of China's anti-involution focus across energy and solar supply chains. In this AGM, they spoke a lot about specific targets for new energy business, the entire value chain, and that is what the streets seem to like as well. They say they are also seeing a lot of focus on consumer retail and telecom, which is bearing fruit, and that's why the involution would add $20 billion in NAV and 17% to FY28 EPS as well. They're raising their new energy estimates in terms of NAV by 20% to $25 billion, which will happen in FY27.
Sonal, thank you for that update. Reliance among the contributors to the Nifty gains, at least in the initial part of the session. Get your chart check as well from Jai. Jai, what are the charts for Reliance indicating right now? It's been a bit of an underperformer in the last month or so. And at around levels of 1380, 1400, do the charts indicate some value for further upside?
That's right, Hormuz. The stock was doing pretty well up till July, and from there on, it's been underperforming. No wonder Nifty has been mimicking its move. The zone of 1340 to 1325 is extremely important. And I think there is a possibility that yesterday's low was an important turning point for the stock. So as long as the stock can hold about 1325, it's got a bullish potential to scale back to at least 1495, if not take out the July highs. So if we have a follow through tomorrow, I think there's a reasonable possibility that the stock will proceed at least to 1495 to July high, so about 1550.
When does the Nifty Bank start participating, Jai? That's point number one. And secondly, Nifty Intraday did cross important levels, 20-day moving average, 100-day moving average. Did not close above that. Why is that?
Yeah, the main drag for the banking sector has been the private sector banks, but SBI is coiling up in a narrow range. As long as it can hold about 790 to 800, I think it's a positive consolidation. The breakout, though, comes only above 837, 840. I think it's a bullish consolidation, but that will get negated only below 790. So I think once it crosses 837, that will change the picture for the banking sector. So we'll wait and watch for it. Don't want to preempt the market.
All right, we take that point. Sudip, we'll come to you for a stock. Before that, let's talk about that. It's the brokerage commentary that is coming on Phoenix Mills, which gained after a bullish note coming in from Motilal Oswal. Sonal joins in once again. Sonal.
Motilal Oswal is bullish on Phoenix Mills. They have upgraded the stock to a buy. The target price is at 2,044 rupees a share. What they like is the fact that they're adding new malls, and this is something which will start seeing results from FY27 itself. They continue to diversify, and this could add around 2,800 crore rupees in terms of rental income overall by FY27. That would mean a 21% CAGR in the retail rental income. The office portfolio, the other part of their business, is also expected to surge 3 times. Now let's talk about their hospitality business, because they have been expanding there. They bought an 11-acre land in Thane. This will add 3 times the keys that they already have and take it to 1,800 keys by FY27. The company also acquired the remaining 49% stake in Island Star Mall developers, and this will strengthen their high-quality retail asset portfolio. This will also be earnings accretive from year 1 itself, and that's what they are very bullish on.
Sonal, thank you for that update. Phoenix Mills ending 3.5% higher. Sudip, Phoenix Mills among the real estate plays, considering the fact that it has a diversified portfolio of assets, be it commercial, malls, hotels, office spaces. Is that one of your preferred bets within the real estate space, or would you choose to go for proper pure play real estate developers?
Armaz, we have been positive on commercial real estate for quite some time, and Phoenix is typical play on commercial real estate. They have the malls, they have the office spaces, and a little bit of hospitality, and they're expanding pretty well. And the demand for curated, customized office space has significantly gone up post the GCC boom, and Phoenix is definitely one of the beneficiaries of that. So absolutely, there is no doubt about the potential of Phoenix over the next 2-3 years, and this report actually highlights that. I'm not sure about immediate benefit, tangible benefit to the company, but yes, if you're looking at a 3 to 5 year kind of a time horizon, I think definitely Phoenix Mill is a good bet.
All right, we don't know whether there's an immediate tangible benefit or not, but speak about immediate tangible benefits, it could perhaps come in the form of the GST Council reducing rates. The 2-day meeting starts tomorrow to discuss rate rationalization. We have a quick peek into what the expectations are this time around, what's on the agenda, where the rate cuts could be. Tim C joins in to give us a quick refresher. Tim C.
Well, Prime Minister Narendra Modi's vision in his Independence Day speech on next generation GST reforms could soon be a reality. And as you rightly mentioned, the GST Council is set to meet on 3rd and 4th of September to discuss the centre's proposal to shift to a simplified 2-slab structure of 5% and 18% with a special 40% rate for sin or demerit goods. If approved, the move will make a wide range of common use items cheaper. Daily necessities such as soap, shampoo, hair oil, toothpaste, medicines, biscuits, namkeen, bhujia, footwear and apparel below 2,500 rupees, footwear below 2,500 rupees, along with ghee, butter, pencils and exercise books are expected to fall in the lowest category of either 5% or in some cases even exempt category. Aspirational goods such as televisions, refrigerators, washing machines, microwaves, small cars and motorcycles below 350cc capacity of engine, which are currently taxed at 28%, may move down to 18% slab. The proposal is also to include major relief for consumers and industry, especially apart from that on life and health insurance premiums, including reinsurance, which is likely to be exempt from GST from current 18%. While the centre is confident of a smooth passage, states have raised concerns over possible revenue losses. They have sought assurances of revenue protection pointing out that they are not opposed to rate rationalization, but they need compensation to meet their financial obligations at the states. The September 3rd and 4th Council meetings is expected to be a crucial one, especially as it has the potential to usher in the new phase of GST, simpler, consumer-friendly and aligned with Prime Minister's reform agenda. So we'll have to see what happens finally in these 2 days of the meeting, what all gets cleared, what all is actually the way forward and the consumption boost that is aimed with this GST reform.
Timsy, thank you for that curtain raiser ahead of the GST Council meeting. Sudip, there is a lot of chatter with regards to the rate rationalization, be it with regards to automobiles, to consumer durables. But does that really reflect a tangible benefit that, okay, if there is a rate cut, people will actually throng and consumption will increase? Because I was reading a note today which said that wage growth is the actual underlying factor that needs to happen for a more sustained consumption boom. What do you make of this? And do you believe that with the run-up that these stocks have seen, after the news, do you book some profits here?
Well, Hormuz, I think, definitely this will be a fillip. Wage growth is definitely a very critical factor. Unless you have money, how do you go and buy? But, we are heading into a festive season. Interest rates have been coming down. Monsoon has been good. Rural income has improved. So under the circumstances, if you have a GST rate cut, which will bring down the prices of some of the consumer durables and all that reasonably to a certain extent, definitely that will incentivize purchase. The demand for consumer durables as well as demand for consumer durable financing loans, both will go up. That's what our belief is. Long term, yes, wage growth is critical to sustain demand, but we will see definitely a blip upward as far as demand is concerned for all these stocks.
All right, Jai, Sudip, thank you so much for joining in and giving us your views on the markets, individual stocks and the way forward. Thank you, and we will hope to connect with you soon as well. Take a short break, get you all the top corporate voices along with the key market events to watch out for tomorrow.
You're still with us here on Markets Forward, and on to some top corporate voices that we had through the day. First up is Indian Hotels. The management says the hospitality industry would be happy with a 5% GST without input tax credit for rooms costing below 7,500 rupees. Other than the GST, the management also highlighted its growth plans. It said that majority of the next leg of growth will come from mid-scale hotels, and added that the brand Ginger is well positioned to have 250 hotels within the next 12 to 18 months. And that's not all. The hospitality chain maintains its double-digit growth guidance for FY26.
Right, next up in the line is Marico. All the FMCG stocks have been doing well lately. The company aspires to touch double-digit volume growth coming in the coming quarters. Further expects to see 10% EBITDA margin in the digital business in the next couple of years as the burn reduces. Management also believes that affordability and availability are the two drivers of growth coming in for their nutrition portfolio. In particular, consumption has remained steady while input costs has seen a marginal decline, and that the GST rate rationalization itself is a great opportunity to drive consumption. That's not all. The company too has sub-brands which are focused on nutrition. They expect to continue in that journey, which is largely driven by consumers increasingly choosing healthier eating options.
We also had the management of Genus Power on the show, and the company maintained that it was never blacklisted technically by the Goa Electricity Department. It was an internal memo which was issued last year, which Genus had challenged, and the Goa High Court had passed an order in the favor of the company. And that's not all. The company was also confident of winning a large share of orders worth 35,000 crores that is up for bidding, maintaining its revenue guidance to be at 4,000 crore rupees and the margins to be in the range of 18 to 20% for the full year.
All right, and with that, we do not wrap on this edition of Markets Forward. In fact, before we wrap, we'll go across to Ria, who will give us all the key events to watch out for ahead of trade tomorrow. Ria.
Well, yes, taking a look at the events to watch out for tomorrow. First up, in terms of economic data, we have the US jobs data coming out tomorrow. From UK, Europe and from India, we have the global services PMI, so keep your eye out on that. In India, some board meetings to watch out for. IIFL Finance, Saman Capital as well as Suraj Estate Developers will hold board meetings to consider fundraisers. For Rolex Rings, they are going to consider a stock split as well as a bonus issue. Vikrant Engineering also lists tomorrow, so watch out for that as well. Some other events, the two two-day meeting of the GST Council will begin tomorrow, and Union Finance Minister Nirmala Sitharaman will chair the meeting at New Delhi. The second day of Semicon India 2025 is tomorrow, and PM Modi is going to participate in the CEO's roundtable at Semicon India. Motilal Oswal's 21st annual investor conference continues through the 5th of September. And lastly, looking at the Fed in the US, St. Louis Federal Reserve Bank President Muzalim speaks on the US economy, and Minneapolis Fed Reserve Bank President Kashkari speaks before the Minnesota Women's Economic Roundtable tomorrow.
Ria, thank you for those updates. With that, we call time on this edition of Markets Forward. From Mangla Minmi, thank you for watching. News and updates continue on the other side.